I'm here today with McLelland from Edison, and we're going to be talking about Nido Petroleum. Ian, could you give me a quick summary of Nido Petroleum and its current strategy?
Sure. Nido is a oil and gas company working in the west of the Palawan Islands in the Philippines. They are a production, development and exploration company. The company has been operating now in the Philippines for about the last 13 years, primarily as an explorer, but recently it's changed its strategy now to one of development and production focus, really to sort of give it more balance.
Could you describe the projects that Nido is looking to grow its production and cash flow?
Okay, well, its key asset is something called the Galoc field. It is something that's been in operation now since 2008 and has already produced actually the quantity of oil and gas that thought that the field would produce through its entire life to date. But actually now what's happened is because of the very strong reservoir performance, the company is able to enter into phase 2 development of this, and this will actually double the production and effectively double the reserves. To put some numbers around this will increase production to about 12,000 barrels gross and increase the reserves net to Nido to about 3.1 million barrels in total. The company also has a couple of other development projects in the pipeline, something called the West Linapacan-A field. This is something that used to be in production when oil price was very low, about $18 a barrel, and it just was uneconomic, so it was shut in. Now that oil's about $113 a barrel today, then clearly the economics have completely changed, and this is something the company is looking to now redevelop. There is going to be a reserves assessment and hopefully reserves declaration in early 2013, leading on to final investment decision late in 2013 and hopefully a development in 2014. There's one final project in there as well, which is the something called SC54A. That is an arrangement that the company has come to with someone called Viking to farm out and develop 3 oil fields on that block. That arrangement is actually somewhat stalling, but the company has very smartly, in my view, arranged a potential other development route to be able to drill from an adjacent block where Nido actually has its own rig.
So if the focus is on development, does that mean we can ignore exploration plans for now?
Well, certainly not, because Nido is actually the largest single acreage holder of all companies operating in the West Palawan Sea. It's something like 6 million acres in total, which is actually the equivalent of 120 blocks. Now, most of these are high impact exploration assets, but in the case of the near-term exploration, the thing that the company is probably going to want to focus on is drilling an exploration well on its Galoc field. And this is something that we are actually imminently expecting a drill decision on, and I think that would be a very encouraging sign for investors, and again be able to sort of boost the reserves position potentially in 2013 from the overall Galoc structure. Beyond that, though, as I say, there are high impact exploration targets, and a lot of these have been built up and matured through modern 2D and 3D, so there is now a large range of potential targets that we expect 2 of which to be drilled in 2013 and 2014.
Now, South China Sea oil exploration has been in the news a lot recently. Do issues with China affect Nido?
Well, that's a good question because it links into the thing about exploration. As I say, they have these large exploration blocks. Now, if you were to look, it's a bit of a grey area, but if you were to look at what we understand to be the claims of China around the sovereignty of the South China Sea, it really only impacts one block of Nido's, which is SC58, and a little bit of something called SC63. That means that the majority of the exploration acreage that the company has is outside of even what China is claiming. However, investors read all this stuff in the news. There's been things going on about Vietnam very recently, and I think that does impact on both investors and potentially on industry partners. So although it won't actually directly affect Nido, it could affect both investor sentiment and also the possibility of them being able to attract partners to develop these exploration things.
And finally, what about funding? Can Nido afford to carry out all its plans on its own account?
Well, if we rolled the clock back a little bit, one of the big problems that Nido has had over many years, because of its exploration focus, has been churning through cash. It has With the recent appointment of a new MD, Managing Director Phil Byrne, who actually is a very experienced developer in the oil industry, he has now brought this development focus, which really very quickly brings a lot of cash flow to the company. To get that cash flow, they've had to make some significant investments. They've raised 30 million in debt and almost 20 million in equity in the last 6 months. Some of that equity is still subject to EGM approval. Once that is in place, I would imagine that the company is fully funded for all its near-term exploration and development activities. Longer term, the big exploration targets, additional development projects, that may still require additional funding, but the important thing is to get into that self-funding state.
Ian, thank you very much for your time, and if you would like any more information, please do visit the Edison website.